Should you consider a variable rate mortgage? The answer is yes. Why wouldn't you? I guess my question is, why would you not consider a variable rate mortgage? When you look at the numbers, it was a few things. So CIBC a number of years back did a study, did research, and they were looking at 80 years prior to the date of that research study was done, and over that 80 years, they found variable rate mortgages tended to save people money over the lifetime of the mortgage, over the term, you just save more money if you have a variable rate. Now, a lot of people don't like variable rates because they are afraid of significant changes to the interest rate. And I think a lot of that has to do with just unawareness of how uh, the interest rates work between the variable rates and the fixed rates. What produces that interest rate, what that interest rate is based on, are two different factors, right? Two different mechanisms are relied upon for the change in the rates. With the fixed rates, it's based on yields in the bond market, and in the variable rate, it's based on the bank rate, which is uh, determined by the Bank of Canada. So when the Bank of Canada issues guidance on what the rates will be, you have a fairly good idea as to what the rate's going to be. If it's going to be stable, if it's going to be fluctuating, if it's going to go up, go down, and you have an idea of what's going to happen with that because that rate is based, well, both rates really are based on inflation, the variable rate and the fixed rates, right? The yields in the bond markets. They are tied to inflation. They're tied to a number of other things as well, but inflation is one of the drivers. So the Bank of Canada will increase interest rates to stave off inflation. The yields on the bonds will increase because people are trying to stave off inflation, the corrosive effects of inflation on the capital that they're investing, right? So they both basically move by the same thing. The question is, to what degree will the jumps be? Now, historically, we've seen the Bank of Canada move rates by a maximum of 1/4%, right? And that up or down, right? And that will translate into um, a change in the variable rate. Now they have 8 meetings per year to determine this change. Oftentimes, this change does not lead to any change, or this meeting does not lead to any changes. And if that is the case, then you have 8 times in the year in which the rates may go up. And if you have a variable rate mortgage, you are allowed to lock that rate in. No, sorry, you lock a rate in. You can lock your, let me correct that. You can lock your rate. Now, what that means is you will have the rate for whatever the 5-year fixed is. Now, if that is with one of the bank lenders, that is typically one of their posted rates without a discount, which is usually significantly higher than what you can get if you were to do a purchase or some other type of transaction with the bank, a transfer or a refinance. Now, if that is the case, it doesn't necessarily make sense to do the switch or to lock in your rate because you'll just be continuously paying a higher and higher rate. Now, it may be the case that if you did a switch, depending on no, actually, if you just did a switch, you might actually save more money. And the nice thing about having the variable rate mortgage is you're only going to pay 3 months of interest as your penalty, typically. There are some institutions that have a different way of calculating that, but typically it's only 3 months. You're going to pay only 3 months of interest, and if that is the case, why would you have that flexibility. Now, if you had a fixed rate mortgage, you're going to pay significantly more in the penalty, right? Typically, and depending on where you are in the term, but if you're at the beginning of the term, then you're going to pay significantly more. Um, and if you yeah, and basically you just have the a higher rate. So right now, the difference between a variable rate mortgage, you can get a variable rate mortgage for around 1.35%, and the fixed rate mortgage, right, on a 5 year, if we compare 5 year variable to 5 year fixed, you're going to be looking at a significantly higher interest rate. So it's around 2.04 or 1.99, depending on the institution, for a 5 year fixed. Now, so you potentially have a higher interest rate you have to pay now. You aren't looking at paying any increase in interest rates yet, because the guidance issued by the Bank of Canada states that they're not expecting to see any changes for the next little while. And yeah, that's really it. I mean, there's a lot of advantages, especially right now, to getting a variable rate mortgage. I mean, we've seen fixed rates jump over the last little bit because yields in the bond markets that you were just discussing have gone up. So, and a lot of that is due to inflation concerns. So let's take a look here at the article and you know just see what they think. So, could recent news from the Bank of Canada signal a continued boon for variable rate mortgage in 2021? The bank's announcement in March that it would keep its overnight rate as a lower bound for the foreseeable future was good news for Canadians exploring the possibility of going down the variable rate avenue. Data from Ratehub showed that fully 60 basis points currently separates the best fixed and variable rates offered by Canada's top five banks, which with little immediate prospect of a prime change. Only 9.5% of economists surveyed in the recent Finder poll predicted lowest rate movement by early next year, meaning the recent swing toward a variable rate mortgage or some blend of fixed and variable rate payments could continue in the long term. I mean, like economists have an awful, absolutely terrible track record of predicting anything. So take that with a grain of salt, whatever that means. But you really got to do your own due diligence when it comes to coming up with conclusions that you're comfortable with. So Ron Swift, who's the guy that was pictured above, CEO at Radius Financial, told Mortgage Broker News that much of the current popularity of variable rate mortgages lay in the ability of customers to switch a fixed rate with relatively little penalty. And there we go. That's one of the biggest benefits. One of the biggest benefits to a variable rate mortgage. A lot of people want to talk rates. Rates are good. Rates are fantastic. Don't get me wrong. You want to get a good rate, but you also want to be cognizant of penalties paid because that's where they get you, right? That's when I say they, I mean, I'm not saying that they're doing it on purpose, but they don't lose when you break your fixed contract early. They don't lose, you do, right? And if there was a way of mitigating that cost by having a bit of a plan ahead of time as opposed to just taking what the 5 year fix because your parents told you to take a 5 year fix, your cousin told you to take a 5 year fix, your friends told you to take a 5 year fixed, but they never had a conversation with you and it turns out that when you had the two more kids in 2 years or 3 years, then you needed a larger space and you aren't able to move your mortgage or it didn't make sense to move your mortgage. Now you have to pay $10,000, $15,000 to close your mortgage. That could have been avoided, right? Just by a little bit of planning. So, I think it's if having that flexibility is probably the number one benefit to you, right, as a client to somebody that's going to have a mortgage. It's probably one of the number one things you want to keep an eye open for. You want to have prepayment privileges if you're going to actually use them. Be honest with yourself, right? I mean, say that you want to have the prepayment privileges, but to what degree do you feel like you're going to use them? Do you have money set aside for using that? Are you do you have that baked into your budget? Do you even have a budget? How do those things going to work? So yeah, so if customers want to pay out any reason at any time, it's a 3-month penalty. So it gives lots of flexibility and options for consumers right now. Uh, that penalty of a payment of 3 months of interest represents a modest amount, according to Ratehub.ca co-founder James Laird, and acts as a strong incentive for customers to opt for a variable rate. Swift said that while there was a degree of risk in every transaction or decision, the current mortgage market appeared relatively calm. We know that we can't sustain this low interest rate environment forever, he said. Customers have to look at what their personal circumstances are and what risk they want to take on. But right now, there doesn't seem to be any significant concern about rates rising anytime soon in terms of the overnight rate. In light of that low penalty for switching, a growing current trend for Canadians to choose a variable rate mortgage now before reevaluating their options in 2023. The post-pandemic outlook is somewhat uncertain, with Swift emphasizing that rates will eventually rise. Of course, who knows when though? I mean, we know that it's like gravity in a sense, like everything eventually falls to the ground. But sometimes things can soar in the air for a lot longer than expected before that happens. But eventually it's going to hit the ground. It's just a matter of when, right? Still, he added, his confidence in the government and central banks to effectively manage the accompanying risks. Well, I mean, I don't know about that one. Don't assume that the government's going to manage anything correctly. Like that's I don't know. That just seems a little bit ridiculous to me. They haven't, and I don't, and this isn't to say anything about any particular government. It's just there has been a poor track record historically, a very poor track record when it comes to managing crises, whether it is economic or and you name it. Like we have um, resilience kind of, or not necessarily an immunity, but the last major economic downturn that happened in the financial crisis that happened in the U.S., we were largely immune to that for a number of reasons, and it wasn't necessarily because of their ability to actively manage the situation. It was more so the system was already set up in a way for it to be resilient as that crisis occurred. So I'm just saying so it looked great looking through the rear view mirror. We didn't have to do a lot of things to manage ourselves through the crisis, compared to a lot of other nations which had just absolute collapse of their financial system. And yeah, we came out smelling as close to roses as possible. That being said, um, you have to really kind of take care of yourself and manage your own situation, and not assume that if something were to happen that there will be something to take place to look after us all, or to look after you more specifically. So when they do go up, assuming they're going to go up, I think the government's going to continue to take a measured approach, he said. Everyone today is qualifying at a stress rate. So when you think about real estate versus the stress rate, do we think 5 years from now that the real rates will be above today's stress rates? Who knows for sure? But as a person who's yeah, but as a person who's been in this business for a while, I'm not foreseeing that. We've had low rates for a decade now or longer, and I think the government, central banks, and everyone else has done a pretty good job of maintaining controlling the inflationary targets. I think it's interesting actually going forward with regards to that, because what we might end up seeing is Um, as I mean, is this maybe this is the new interest rate environment, and that everything is just going to go down even lower? But what happens though? How low can rates actually go? In I think it was Denmark, where they're seeing negative rates being offered by banks, or 0%. You can get 0% interest loans from the bank, from banks in Europe. 0% interest. That's how cheap money is. Like we went crazy when we saw the 0.99% because it's as close to free money as we've ever gotten or we've ever came to. And seeing 0% essentially is free money. Essentially, they just give you money. You just got to pay it back over time, and you can get the benefit of whatever returns come from borrowing that capital, the full benefit. And so the increasing upside of the variable rate mortgage was exemplified by Ratehub. Data showing a 36% increase in clicks for variable rate options over the previous month, compared with just 11% growth for fixed rate clicks. It's no surprise given the growing popularity of variable options that the role of mortgage brokers has taken an elevated significance of late. Still, Swift emphasized that fixed rate options represent an excellent choice for many customers. It's all context. It's all context. That's not this. There's no way to say definitively you should always take a variable rate mortgage. You can't say definitively 5-year fixed is always the best. 3-year, two. You can have the reason why different products exist is because at different times, different products will make the most sense. So you have a selection of tools to choose from in order to fit the situation. Never get hung up or too attached to just the number of years, the particular rate for that. Everything has to make sense for your situation because it's not a matter of just saving 0.1% on your interest. It's a matter of being able to manage the life cycle of your mortgage so that you minimize the total cost over the lifetime of the mortgage contract, right? So if you're not watching rates every day and thinking that you don't have much tolerance for any variation in the rates, you should probably take a fixed rate mortgage, just because you're probably not going to stay on top of it enough to catch when interest rates start moving. Swift said that the onus was on brokers to tailor their recommendations to each individual client and make sure that they were recommending the best product in each case. Exactly. This is not a matter of being an order taker or just like, going to it's not a vending machine, right? You need a little bit of advice sometimes to coordinate these things. Most people, they think that, oh well, I just got the best 5-year fix, and then when you break your mortgage through 2 years in, 3 years in to do a refinance, and you could have just got a shorter term. If you especially if you know that average Canadian, or 6 out of 10 Canadians on average, will break their mortgage within 38 months. If you know this, then why would you ever take a 5-year fixed outside of having full confidence that you will not break the term of that mortgage? So, anyways, mortgage professionals should look at customers' lifestyles, their thoughts, wants, and needs, and line that up. And with that, that's out there with what's out there in the marketplace. Yeah, and I think that's all fairly straightforward. I thought it was a good article. For the most part, I mean, it's just interesting to see the change in consumer demands, right? I think a lot of people have just been I think variable rates have probably been underutilized over the last few years because of the mystique around them, how they work, and also the fact that Canadians are usually incredibly conservative. They have almost no tolerance for risk at all when it comes to anything. So if there is even the remote chance there is some risk to owning the product, most people are just going to say no. We don't want to participate in that at all. But now I think maybe it's a generational shift. Maybe people they just see such a stark contrast in the rates, and also maybe it's a combination of you've been around the block enough, you've seen the penalties on these fixed rates, and somebody has a conversation with you, or you've done a little bit of research, and you realize, oh wow, I could have saved a ton of money if I just had a variable rate mortgage. I would have saved money on the interest, and I would have saved money when I when I ended my term early. Anyways, that brings me to an end here. Feel free to like, share, and subscribe if you thought any of this was of value to you. And of course, I'm more than happy to answer any questions you may have with regards to mortgages in Canada. Feel free to reach out to me. And the contact details, I guess, will be below. You have yourself a wonderful rest of your day, and look forward to the next video. Take care.